little bit more riskier right now. I don't know, but I want to give you the setup. So let's create another candle, right? A candle that comes below, because I'm going to start closing this up with what happens if we continue to move down, what you should look for. So, hey everyone, the Motivational Professor here, and welcome to our Sunday crude analysis video. We're going to start breaking this sucker down right here on this weekly chart. Something very, very important to look at right over here. We're going to be talking about this because if we look over here to our left, we have a lot of traffic going on here. So this is going to be a very, very important key level that we start talking about. So again, welcome to the channel. And if you are brand new, let's get this out of the way. Hopefully you find value. If you do, you'll hit that like button for me and you will subscribe as well. To all my subscribers, thank you so much. As of today's video right now, I'm recording the night before. We are one subscriber shy of 20,000. So thank you so much for your support. And today is Sunday. As you know, my team, the Dolphins, are going to be playing in Frankfurt, Germany. So instead of wearing the hat, I'm just going to show my Dolphins some love right here. Go Dolphins today in Germany. To the chart again, and let's begin. And as I begin with the analysis, just a quick reminder, if you don't understand me or you don't want to hear me, you can turn on your closed captions and there's going to be subtitles in over 10 languages available for you as well. Okay, so let's jump into our analysis here. We're going to kind of start with our weekly time frame. And then at the end of this video, I'm going to tell you where I think, from what I see, might be happening with crude oil. Now, when you watch this video, as you know, market opens at 6 p.m. Eastern Standard Time for crude oil. And again, we are going to probably have some form of a gap. I haven't really heard any major news over the weekend, but again, we shall kind of wait and see. So we are kind of looking at this area here on the weekly time frame. We've been here a couple of times before in this general area back, a long time ago. Okay, so again, we have to kind of look at this. This is kind of back into 2012 and 2013 as well. So as we kind of zoom back out, of this market on the weekly time frame, we begin to see a couple of interesting, kind of factors happening here. And the one thing is right here, this level that we rejected on the weekly about 8 weeks ago, okay, also kind of gave us this teacup right in here. Okay, we rejected this area. Okay, and again, for those of you that are not familiar with it, a teacup kind of does this bottom part of a cup, and then we get the handle, which is where we are right now. So it gave us on the weekly kind of that teacup effect there. It also gave it to us a little bit smaller one right here, but we have this large teacup that happened right here. So we got to understand that these are going to be some of the key levels. And then to the bottom side, the next level that we really have to look at would be right in here, right in this level right in here. And again, we're talking down about 71 on the weekly. Now, a couple of weeks ago, I thought that was not possible. But if you stick around to a little bit later in the video, I'm going to show you that going into the 70s on crude oil is very, very possible pretty soon, unless something happens major in that war overseas with what's going on in Israel. 70s is very possible. So keep that in the back of your mind. So let's kind of jump back into the full analysis here. So I'm just going to kind of keep that here just for some perspective where we are at on this weekly time frame. Now let's go back and let's take a look at the last few days and kind of what's happened. And this is where I could always take a zone and kind of tweak it a little bit, even though I think we're kind of sitting right in here where we have seen, right, the different levels of hold on, let me get another brush here. The different levels of resistance here, 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 right? Here, here. So we've seen that level of resistance here. And then here, we saw the level of support. Okay. We saw that level of support. Now, so we understand these are pretty key levels. Okay. These are pretty key levels. And again, there's always going to be smaller levels within smaller levels. And because we did see this price react here at this level, I'm going to mark it up with a white line, meaning there is another intermediate level there that was not very visible on the weekly. But if price continues to go down, then we have to account for 77.57. Okay, so as we kind of zoom in here, we begin to see that in the last couple of days, we had a price pull up and then a price pull down. Now, what's interesting is if you look right here, this is about 83.50 and this is about 80.40 or so. So over the last 4 days, we have just been trending within this bracket right here. And I'm going to show you that how that looks over the course of the next several minutes together on this video. So again, we are kind of been trapped in here, but what is going to happen, and again, don't discount that we can go lower. You always hear me say we are going to trade what we see and not what we think. But my initial bias is that we are going to go lower from where we are right now with crude oil on this chart up here over my shoulder. So as we go back to full screen mode, again, we're going to begin to break this down here. And again, if you're brand new here, I hope you're getting some value. To my members in the members group, thank you so much. And again, we will definitely continue to drop more value in the members area. And if you haven't yet joined the members area for the price of a cup of coffee, take a look at that if that interests you, because we are getting ready to close the doors at this $4.99 a month entry level. Okay, so let's begin to break this down here. And so now I want to drop down to the 8-hour chart. Okay, so as we look at this 8-hour chart, a couple of interesting things that happened right in this area right here. Now, for those of you that are with me in the group, we know how important our Fibonacci levels are. And we can see that we had that super nice rejection right at that 61.8 several times. So as I talked about last Sunday on last Sunday's video, I felt that crude oil was going to continue dropping. So we have just been, for the most part, selling the pullbacks, okay? Selling the retracements back up. We've been selling them. Now, we've had plenty of people take buys from these lower levels because low risk, high reward opportunities from zones. But again, we've been talking about, hey, let's wait for these retracement levels back up, and then let's take the sells, and they've worked out very nice. So again, that 61.8 level has worked very well, especially on the higher time frames as well. And of course, we make our entry at the lower time frame. Now, let me remove these fib levels, and I want you to take a look here now. So over the last several weeks, last 2 weeks, we've seen rejection at the same 80-40, rejection, rejection, rejection. So on the top side, we've seen that rejection at that 83.40 area. Rejection, rejection, rejection. So on a smaller time frame, as we begin to kind of move down, we've been trapped in here. So it has become fairly easy to trade these zones because we're just putting our stop losses right above the zones, and we're putting our stop losses just below the zone. But what's going to eventually happen is this: those zones are not going to stay there over and over and over. So if you're just getting into the crude oil market, or you've seen other videos and we talk about support and resistance at around those two areas, understand that it does not mean that the next time we go there, it is going to hold. Okay. This is why having a good trading plan, understanding if you're going to go in a fifth or sixth time, you've got to keep your risk small. And if it hits your stop loss, it's okay. I would rather you lose 20 or 30 points than to stay in an open trade. And next thing you know, you're down 200 points on crude oil. Okay. So here's my first question for you of the night. If you have stayed in a trade recently much longer than you really should have, because you thought it's going to turn around, and it's not turning around, then I want you to go down to the comments below and type the word psychology, because all that is a mindset. Understanding that you would rather lose 20, 30, $40 or $200, $300, or $400 than $4,000 or $5,000 because you think that eventually it's going to continue to come back. So we've got to work on our mindset. So go down below and type the word psychology. Okay, so we are now in this pattern here. So there's a couple of interesting things here that I'm going to be breaking down on the smaller time frame. The first one is that we are going to mark up this area right in here as this top zone. We are going to mark up this area here as our next top zone, and we are going to mark up this area here as our next top zone. And then to the bottom, we have our zones right now. So what I would like for everyone to do, especially if you are using TradingView, is to pause this video. I'm going to go back to the last screenshot, and I'm going to leave it up there for a few seconds before I start talking, because I either want you to take a picture of it, okay, or I want you to pause the video and go and open your TradingView chart. That way you can mark up these zones, and these zones will be good, trust me, for definitely the rest of the week. Okay, we are going to be trading these zones, and we'll talk more about that as we move forward. So as we kind of get back into the full analysis here, let's now drop this down to a 4-hour chart. Okay, and here is the interesting thing that we have to realize. Okay, on this 4-hour chart, I'm going to kind of mark it for you. So we had here, and then we came here, and then we came here. I'm going to just take a few of these out so we don't keep talking about it. Then we came here, and then we came here. Okay, so as we are looking at just this one section right in here in this area, okay, I'm just going to kind of put a let's put a line here, just as we are talking about this area right here that's kind of separated, right? We begin to see that we are making a lower low, a lower high, a lower low, a lower high. So we have been walking down crude oil since about 89.50 on this chart. So it's important to understand that you understand price action, that you can begin to see where price is going. And that's why we've been talking about, hey, if you're patient, let's sell the retracements or the pullbacks up. And let me show you why that's so important in these particular levels here. Because again, you can begin to just wait in these zones, okay? And your risk becomes much, much easier. Because, for example, this was a short that we took off the zone, and the stop loss would have been a few pips or a few points above the most recent high, which was over here. And then again, we're taking it down for at least one zone. Okay, you can always shoot for two zones, but we're always going to go at least one zone. But here's the important thing. This was a 3.69 risk to reward ratio, and that's amazing. And this is why, if I keep talking about, let me go back here for a minute. If we keep talking about stopping your trades with a 20-point or 25-point loss, that's okay. Because when you win these 3-to-1s, 4-to-1s, and you're winning 100 pips or 100 points, that 20-point loss is not going to matter. But if you leave that trade open, it hit that number that we said you should close, and you leave it open, and now you're down 200, and you eventually have to close with a 300-point loss, that's going to require a lot more trading just to break even on that loss. And what that's going to cause you to do is to revenge trade. And you never, ever, ever want to revenge trade, because that means your psychology means it's bad, and you never want that. So we want to definitely avoid that revenge trading. So as we look at this, I'm going to remove this here now, right? And then we kind of came back down to this zone. Again, I want you to spot things over and over. I'm going to leave this here again. I talked about it at the beginning of the video, right? And then we had this drop back down on this red candle. Again, my drawing was not good. So let's try to do this again. We came down, we came back up, and then we had this big red candle. So let me ask you, if you remember what I called this pattern at the very beginning of the video, go down below to the comments and type in the name of that pattern. If you remember, I showed you this at the beginning of the video. So as we kind of go back here to full screen mode, let me go ahead and delete that marker. And we had the exact same thing happen again here. Came here, came back up, and then we had this piece. Okay. Now, again, will this do this every time? Absolutely not. Right? Absolutely not. We've kind of been ranging in this area. But more importantly, what I want you to see is that we have been walking down crude oil from 89 to where it is now 80. So when I tell you that we are going to see 70s, this is where I truly believe we are going to see 70s until we change the price action that is happening. Okay. We ended up the day on Friday on this 4 hour going back up, taking about 50% liquidity of this candle. And again, I believe the sellers are still in charge, but we are going to wait to see where price opens on Sunday. So now we are going to drop this down to a 1 hour chart. And here's kind of what I've been talking about. And I'm going to go ahead and remove these circles here as we go, so they're not too distracting to you. But here's where you can see price a little bit better. And listen, to me, right, with everybody on trying to teach on YouTube and everybody's doing their thing and everything else, listen, at the end of the day, right, here's some kind of a free tip for you. At the end of the day, if you are the kind of person that is trying to get into 20,000 telegrams, 30,000 discords, and all you want are signals coming your way, and you never take time, months, years to really learn this, then you will always need to rely on someone. And when that person is gone, if that person loses, if that person disappears, then what do you do? So take the time, invest in yourself, right? Invest 1 hour on the weekends to just look at charts. Because if you start opening up charts like this and you begin to understand and see price action, then you give yourself an awesome ability to say, okay, it's come here before. If it comes here again, I'm going to sell with a very tight stop loss. Hey, it's come here before. I'm going to sell again, right? And then vice versa on the buys. Hey, it's come here. I'm going to sell. I'm going to sell. I'm going to sell. Or even on the buys here. It's come here 4 or 5 times. I'm going to buy it up. So again, there's just a lot of different things that you can do. But I got to tell you, and I got to be 100% honest with you. And this has been happening really for the whole 7 years where I started to learn how to trade, but I see it more now than ever before. I just got a message this week as well. It kind of says something like this. Hey, I want to join your membership. How many signals do you give out each day? And I was just honest with the person. Hey, this is not the group for you. Like, if you want to come here and you want to learn, listen, first of all, you're paying $5. So I don't know how many signals you would expect for $5, number one. But number two, let's say I gave you 100 signals a week, right? If you don't learn anything from that, if you're just waiting to buy or sell, and then your account goes poof, right? What do you do? Who do you blame? You only blame yourself because you're trying to take shortcuts. So I get it. Everyone needs help. And for the almost 20,000 that are here, thank you for being here. And maybe it's one thing you hear from me, one thing you hear from another trader. Hey, that's awesome, right? That's awesome. But you can't take shortcuts. Just like you can't take shortcuts in life, you can't take shortcuts in trading, or you won't be here 7 years later still doing this and being profitable, right? We can have a lucky week, a lucky month, but even have a lucky year. Can you sustain this? This is why you have to get in the trenches and really learn this kind of stuff over and over. And the more that you can train your eyes to look at patterns like this, the more you understand price action, especially on charts that you are going to dedicate 80 to 90% of your trades from. You begin to read it like a book. So as we are here now on the 1 hour chart, there's a couple of different things. And I want to just give you one more perspective before I go into the analysis, and that's the 15-minute chart. So for those of you that like to trade on the different charts, there's 15, there's 5, there's 3. Again, wouldn't put too much emphasis on that. I either like the 15 or the 1 hour, but to me, all the zones are created on a 4-hour time frame or higher. Okay, so let's kind of get into what we are looking at with regards to here. So let's go ahead and mark our gap. And I'm going to be giving you some areas that you should kind of watch out for as we move forward. So obviously that is going to be our gap. Now, let me say this regarding the gap, and that is we are under some weird market manipulation, if you want my honest opinion, right? For those of you that trade the indices as well, US 30, NASDAQ, S&P, right? Just like I do as well. I trade those as well. And if you want more analysis on the indices, let me know that down below in the comments as well. And maybe I'll dedicate one extra video a week to just the indices. But I think Friday was a great learning tool for all of us. I know it was for many people in my group because the NFP came out and the jobs report was negative, right? Less jobs than expected. Unemployment rate went up in the United States. And did you see what the market did? The market went up 300 or 400 points. 2 years ago, that would have never happened, right? The market would have tanked. Bad news. So this market is overinflated. This market is over manipulated right now. So you've really got to use caution, right? So gaps, as a matter of fact, we still have gaps open for the NASDAQ and the US 30 and gold from over 2 weeks ago. I went back to my journal to 3, 4, 5 years ago, and I never found that to be happening. I never found that. Usually they would close within 24 to 48 hours. Every once in a while, a gap would go a week, but to have so many pairs with still major gaps, that has not happened. So the market is being played, and they're playing all the retail traders. So just use caution, right? Use caution if you are going to get in a gap. Let me tell you, I may limit how many gap trades I take from now to the end of the year because things are a little bit wacky right now. So I'd rather just let it do its thing, and then we'll trade our zones come Monday through Friday. So as we go back to the chart, let's take a look here. Okay, so we have our gap right in here. So, something that we have to definitely look at is what's going to happen if price, comes back up. Well, if price comes back up to this area, right, we've now seen this consistency, right, on multiple occasions. Now, of course, anything can happen, right? Anything can happen. But because we are trending down, right, I'm going to look, first of all, to see if we can get a fib level entry here. Okay. And when I say here, let me move this here. Right. I really like, especially in today's volatile times, I kind of like this open area right in here. Now, if we had a fib level on it, that would be about the 78.6. Okay. I don't add the fib level because I like the spacing, but I would kind of look at this area right in here. And here's also why. If you look over to the left, you can kind of see that when we're in this box here, we had previous rejection on multiple occasions to the top side. And then we also had rejection here on multiple occasions to the bottom side. So this is an area that tends to, has been wicking both for both support and resistance. So it's a smaller zone area within the actual price action. So again, I think that's important to remember because sometimes we don't understand why price reversed. And because we did all of our analysis or charts on the 4 hours or the 8 hours, understand that every time frame has support and resistance. Every time frame, right? Even the 1 minute chart has time frame or has support and resistance. So I think that's why it's important that we have to look at that gap and take a look at this Fibonacci level. I'm sorry, with regards to if we're going to take our next sell, this would be a nice area here. And it would look something for me like this. Again, this is our high. So that's going to be my stop loss. Let's say I like to go as high in the box as possible. So it would look something like this, right? And always going right back down to our zero line. So that is really an opportunity that if we do get that, whatever you want to call it, retracement up, the pull back up, that would be an area that I would look for. Okay. And then if you throw another Fibonacci level and you want to be extremely conservative, then you can take this higher Fib level right in here. Okay. And that would put you, pretty close, kind of in the same parameters there. That would put you with an entry a little bit higher, not too much higher. That would put you with an entry up in this area. Okay. So if you want to be a little bit more aggressive, that's your entry. If you want to be a little bit more conservative, then that would be your entry. And again, that would give you this type of scenario here, right back down to the zero line. So either one that you pick, I think those two zones are going to give you an opportunity to, as long as oil is trending down, to be able to take a pullback or a retracement back up and then take it back down. I think the buy right where we are at is very, very risky. But I do want to talk about what happens if price does continue to drop down. So again, I'm going to leave this here for a second. If you need to take a screenshot of this, please take a screenshot. I'm going to be deleting the Fibonacci levels in just a second. So again, I'm going to give you 5 seconds. 5, 4, 3, 2, 1. Okay, cool. So let's remove these Fib levels and let's talk about some other possible options. So we know this is a nice level to the bottom side. So if we are going to continue going down, okay, in this level here, what I want to do is I want to go back to the 4-hour because I don't want to give you such a wide level. I want to tell you, hey, where would be a next intermediate level? And that's going to be right here. Let's go there. We had a wick. Yeah, let's go right here. Okay, let's go right here. So now that we go back to our 15-minute chart, we can see here where we are at. And it's ironic, and those of you in the members group have heard me talk about this over and over again. I love the, for example, 80.00, 79.50. I love those 50s and double zeros at the end. You just tend to see a lot of price action happening around that area, just like here, kind of this 80, 50 area. So as we are looking at this, we talked about our two possible sell areas, either to this top area or to this area here on the Fibonacci levels. Now, if price does come back down, okay, then you can look at it. If you wanted to take, let me get rid of that. If you wanted to take a buy, which again, I think might be a little bit more riskier right now. I don't know, but I want to give you the setup. Then we would just invert this Fibonacci. We would put that Fib level there, and then you would be looking right here again, perfectly, right at the bottom of the zone, the yellow line between the 61 and the 68 to try to take this back up to the zero line, which would be the high right here. Okay, so that would be the scenario. If you were looking for a buy, very tight stop loss, that would look something like this. Let's take a long position. Let's say you get in here. You want to go back to the zero line, and your stop loss should be this low right here. Okay, so again, a 2.5 to 1 scenario. And this is where, I keep talking about, I've got a little frustrated with some of the members in my group sometimes who'll send me a screenshot and they're like, hey, I'm down 150 points on crude oil. What do I do? And the first thing I say is, well, first, you should pray to your God that baby turns around, right? Secondly is, why not close it, limit your loss, and just take another position from the next level of support so you can begin to climb that back up. And even if you make half of it, at least it's half that you got back from your account. But leaving it open and just hoping it turns around is not a trading strategy. Okay, that's gambling. We don't gamble in this channel. We don't gamble in our members area. We give you high probability trades. So again, I think that's just so important to remember as we move forward. Okay, so that would kind of be the buy area. And then I'm going to leave this up here for 5 seconds again, if you want to take a screenshot, because I'm going to start closing this up with what happens if we continue to move down, what you should look for. So 5, 4, 3, 2, 1. Okay, awesome. So let's go ahead and close this. Let's remove this. Let's remove this. So we've given you the scenarios up here, but what happens if price continues to drop? Okay. Well, we've seen 3 wicks here. So we cannot discount this wick right here at about $80, right? Again, we're talking about those whole numbers. So if we do get a candle to close below this level, and that's going to be the key word, to close, and let's make this red, okay, then I am willing to bet that we are going to come down to this next level right here. But it would take a candle to close below that level. So how can you possibly look out for that? Well, let's mark our zone. And on a smaller time frame, you're going to look for a retracement, right? A candle below. Okay, a candle below. And this candle doesn't want to cooperate. So let's create another candle, right? A candle that comes below. Then another candle that comes back up. And I'm going to change that one to green. And then eventually a candle that comes down. It doesn't necessarily have to be one candle, but I don't want to feel like drawing multiple candles, right? So this would be called a break. And then we go ahead and retest up. And then we continue down to the bottom side. Okay. So that would be the scenario if we do break below that 80, 40, 80, 50 area. That would be the scenario that we are looking at if we are going to dip into the upper 70s, which I think are very, very possible for this week and moving forward. Okay. So again, that's just my point of view. And I'm strongly urged by that as well, because if you heard me talk about, and I showed you the report a couple of weeks ago, the U.S. is looking to buy crude oil at about $79 a barrel. So the U.S. wants to buy crude oil at $79 a barrel. We started this drop at about 83. We're at about 80. We're very close to 79. When we get down into the upper 70s, yes, we are going to probably start buying based on what we see, because guess what? There's already kind of been some information leaked that that's what the government is looking to do. Now, we're not going to just go off a report. We're going to trade support, resistance, Fibonacci levels. But what I'm saying is how funny that we are already getting very close to where the U.S. government says it'll begin to buy crude oil at $79 a barrel, because they wanted to buy at 70, but they realized that we may not get to 70. So they settled on $79 a barrel. So that's just a little inside stuff that was happening. Hey, okay, I hope you got some value on today's video. If you did, again, thank you so much for watching. I want to kind of find out who stays to the end. If you made it this far, right, we're running almost 33 minutes, right? Go down to the comments below and type the word end, 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 so I know that you stayed until the end, because I wanted to say I appreciate you as well. So if you're brand new, hit that subscribe button, hit the notifications bell for all of you, or you're not going to be notified when the professor puts out a new video for you. And don't forget to like this video. Hey, thank you so much for sticking it out with me. Again, think about joining the members area. We got some amazing things coming up. We got a new platform coming up. People are very successful in there. Just go in there and ask. And we got people from all over the world in there jumping in the group as well. So thank you so much for being here. Again, you're not going to get fancy editing. You're not going to get stuff moving back and forth. You're just going to get raw information, price action, analysis for you, so you can be armed with the best decision-making tool that you have, and that is your brain. In my group, I want people to use their brains, not just me say buy this or sell this, because that doesn't require any brain power. If you build your brain power, you could be self-sustained, because the professor may not always be here for you. Okay, have a great evening.